Good afternoon from the For the CME. This is Chris Robinson with the Cal Guy Group at TJM. And we've got one more business day in the month of March, and also coincidentally it's the last business day of the first quarter. The thing we're watching in the grains, right? Typically I'll talk about the grains or the livestock. I would concentrate on the grains tomorrow. We have another USDA report. We get a monthly USDA report. Sometimes we get two. Throughout the year, though, historically, this report can be very, very volatile. In the last 7 out of the last maybe 12 years, we've had some limit moves. That's where the market either goes limit up or limit down. The setup is there for kind of a gigantic data dump. And where are we now? Well, the market's very oversold. Corn, wheat, and beans. We have not had a China deal yet. Soybeans are almost 70 cents off. They had a $1 rally early in the year, so they're down at the bottom of their $1 trading range. You have corn flirting with its contract lows. You've got wheat. It's had a decent bounce, but it's starting to get some of that back. We had a $1 sell-off in the wheat. We had about a 50-cent rally, but we're starting to leak there. So the setup is we've got a big data report tomorrow. The managed money is already massively short. They're short 1.3 billion bushels of corn. We have a 14 billion bushel crop, so they're roughly short 10% of that crop. And it's the worst kept secret on the planet. Everybody knows the funds are short. They're also short soybeans as well as wheat. So the most explosive move you'd see tomorrow would be if we got a bullish report. Everybody that's short would be out of position. We'd have to buy that back so we could have a big move higher. So the setup is there. There's no guarantee that we're going to have a volatile day, but historically this report has tended to deliver some volatility. So it's a good opportunity to look at either a straddle where you buy a put, buy a call. The May options, if we got about 29 days left to go on them, that might be something when you look at where, you've got 29 days. You know exactly if you buy the put or buy the call, you know exactly the day you buy it, how much your maximum loss can be. That's always a good place to be if you're trading or hedging. And we'll see tomorrow, again, 11 a.m. Chicago time. I would say the first minute or two of trading is probably going to be pretty volatile. I'm more concerned where we settle, though, tomorrow, at the end of Friday's trade. So it's a pretty good setup. Hopefully tomorrow we'll get some action. If you're a producer, if you're a farmer or a rancher, especially if you're growing corn, wheat, or beans, you're always long. So you've got to look and see what your downside risk here is at this level. If you've sold a lot of grain in the past 4 to 6 weeks because you've had bills to pay, tuition bills, tax bills, what have you, this is a situation where it might not be a bad idea to re-own those bushels that you just sold for kind of pennies on the dollar. So that's a strategy to look at tomorrow. This is Chris Robinson with the Cal Guy Group at TJM. If you're looking for help, look me up on the web. Have a great day.